Hi, I'm Mark Reyes from LongPoint ETFs. Welcome to our next video on trading crude oil future ETFs. Built for Canadians with high conviction short-term views, our ETFs provide either 2 times long or 2 times short exposure to crude oil futures. CLUP for long, CLDN for short. For trading, you should be looking for potential pricing surprises either up or down to best fit your views, and then of course position with ETFs around that. Now, what a difference a week makes. Just last week, we were talking about oil going up to $72 a barrel. This was on the back of geopolitical news. Now this week, oil is down all the way to $57, about $15 down, or 20% down. And this is all because of new news on the tariffs. Since the tariff escalation just last week, it's been all about who will blink first, particularly between the US and China. We've seen both new tariffs and counter tariffs put into play as this escalation only seems to be continuing. So far, neither side has been willing to back down, where we've seen the US raise tariffs on Chinese goods to 104%, while China has countered with tariffs on US goods at 84%. If you combine that with tariff activity with Canada, with the European Union, it certainly feels like globalization is coming to a screeching halt. What this means for markets and what this means for oil futures is something that traders really need to think hard about. Now, if we add in talk about the equity markets, which of course are another risk-on asset class, we've seen over the last 4 days intraday price movement over 5%. This is a real rarity in markets, and in fact has only happened in 87, 2008, 2020, and now. So that should really give you a sense of the volatility in the markets as people try to adapt to new tariff conditions. This, of course, is carried over to crude oil as well, and I'll give you an example of how that really played out on April 7th. On the 7th, we heard rumors that tariffs might actually get delayed for about 90 days, and markets reacted extremely quickly. In fact, oil jumped about 5%. On that news. However, within 30 minutes, it had actually come back down to where it had been previously as those rumors were quickly put to bed. This really goes to show the opportunity that exists in volatile markets for intraday trading. So don't just be looking at closing prices day over day, but actually follow the oil price movement over the course of the day. All this ongoing market uncertainty could certainly lead to future trading opportunities as markets try to adjust to the news as it comes out. What we're really seeing is significant price movements that are tied to any kind of call on the tariffs and what that could mean going forward for economic activity. Certainly for trading, this is a very opportunistic time, although it does come with additional risks as we are seeing these price movements both up and down. Thanks for watching. Please tune in next week for more updates as we try to keep track of what's going on in markets and how to best utilize leveraged ETFs. If you have time, please head over to our website, longpointetfs.com, for more updates and to have a look at our blog.